Hi, welcome back to my lesson. This is chapter 7, part 3, loans. There are three types of loans associated with life insurance: automatic premium loans, APL, policy loans, and collateral loans. The first type of loan is called automatic premium loans. And remember, this type of loan is unique to whole life insurance. No other types of life insurance have this type of loan. All right, so just remember that it's only available to whole life insurance. And what happens is, if you miss a premium payment and you have enough money inside the policy to cover that premium, the insurance company will set up a loan automatically to cover that missed premium payment. And of course, interest will start accruing on day one. There's no impact on the ACB with this type of loan, just the cost basis. All right, the second type of loan is called policy loans. If you have enough money, you have cash surrender value in the policy, whether it's a whole life policy or UL, you can borrow directly from the insurance company of that policy. This is called policy loan. And there could be tax implications. Let's take a look. If you take a loan that's less than the ACB, if it's less than ACB, then there'll be no policy gain. So in the first example, Alicia's whole life policy has an ACB of $10,000, and she only took out a policy loan of $4,000. Then she doesn't have to report any policy gain because it's below the ACB. However, the ACB of the policy will be reduced by the amount of the policy loan. So what if the policy loan exceeds the ACB? So in this case, Alicia, instead of taking out $4,000, she took out a much bigger policy loan of $19,000. And remember, the ACB of this policy is $10,000. So she has to report a policy gain of $9,000 when she files her income tax next year. Also, the ACB, remember, has to be reduced by the amount of the policy loan. And since the policy loan is greater than the ACB, and the ACB cannot be negative, so it will be adjusted down to 0. So two things happen with this policy loan. She has to report a policy gain of $9,000, and the ACB is reduced to 0. It cannot be negative. If Alicia starts repaying some of the policy loan, then we have to look at the impact on the ACB and whether she can actually get some refund on the tax that she paid on the policy gain previously. So if a policyholder repays the policy loan, he'll be able to deduct the repayment from his taxable income up to the amount of the policy gain he had to report when she took out the loan. So in the previous example, Alicia had to report a policy gain of $9,000. If he repays more than this amount, then the excess will increase the policy's ACB. So let's go through the example. Remember, she took out a policy loan of $19,000. Now she's repaying some of it, $12,000. And she reported a policy gain of $9,000 in the previous example. The policy loan minus ACB. She reported $9,000 of policy gain on her income tax, which is taxable. All right, so the first thing that will happen is she will be able to claim a tax deduction of $9,000. All right, so she will get some money back when she files her tax return next year. And second, remember the ACB was adjusted down to 0 before. Now, because she's repaying some of the loan, so $12,000 is her repayment, minus the policy gain that she reported previously. So now the ACB is back up to $3,000. So again, let's go through this one more time. When she repaid the loan, two things happen. She'll get a tax deduction of $9,000, and the ACB has to be recalculated. So in this case, ACB will go back up from 0 to $3,000. And as I mentioned before, interest will start to calculate on day one. And the interest will actually increase the ACB. But most of the time, the policyholder would actually not borrow directly from the insurance company. He would take the policy to another financial institution to try to get a better deal, lower interest rate, and so on. He could shop around. With collateral loans, you never have to file the policy gain. It will never trigger policy gain, so you don't have to pay any tax. So remember, collateral loans will never trigger any taxable income. And that's the end of this short lesson.